Let's go to the coalface now and speak to one person right there, Jonathan Barratt in Sydney. He's the MD of Commodity Broking Services. Jonathan, this is a pretty severe correction, of course, for commodities, but for you, I know you're looking at it as a positive, good old Australian upbeatness, saying it's a buying opportunity, John.
Look, John, it has been quite a savage sell-off, there's no doubt about it, and perhaps there's more to come. But I really do think that as the primary inputs start to correct, the oil and copper, then you're going to see that they come to a real good level from which equity prices can respond. Think of it this way, with oil coming back from $100 down to $85, that's a 15% saving that companies are going to have on their primary inputs. So as a result of that, they're just coming to good levels from which I think you can get real profits coming back to a lot of companies. So maybe there's a little bit downside, but overall I feel that this is just a good low from which you can start to buy. Give it a week or two before you start to weigh in.
There are two words, a good low, but again, with the concerns about the double dip in the US, Jonathan, again, the good low could become quite a dreadful low, couldn't it?
Look, it could do, but as I said, I think it's only positive. When you look at oil and where that's traded from, broke through that 95 back to 90, I think the chances are, given that we're continuing to see inventories build in the States, that oil can come back to 85, even down to that $80 a barrel. That's certainly on the cards. But once again, at $80 a barrel, that's a 20% saving on primary imports. So eventually, give it a period of time, that should be good. Similar for copper. Copper in itself has been too high for some time. If you look at what's happening in the market there, particularly with Escondida, that artificially kept the market high. So as a result of that, if copper comes lower, back to 400, back to 9,000, then from there, that presents a good base from which some of these economies can start to then grow, but grow correctly. Not on the back of stimulus, but grow correctly on the fact that their inputs are lower and there is still demand in the market.
So when you gathered your team this morning, what were you saying buy into, or what was your advice on which particular commodity really offers the best value and could offer the best value in the next 2 weeks or so?
It wasn't sitting down there thinking that we're going to start to buy things. What I do think is that and in line with our forecasts, that oil at around 85 or below 90 to 85 represents good value. Okay, because given that the economy, I guess, is thinking about a double dip, if the central bank or if the Fed are correct in what they're doing and they don't provide stimulus, then we get back to really good asset levels, and then from there I think we can start to move. Is there anything out there I'd like to buy at the moment? No, I don't think there is. I think I'm more likely, if I am buying, I'd sit on the sideline. Can I still sell things? Yes, I think you can. I think there are more shorts out there in some of the commodities, for instance, like copper, which I still think is too high, that I think can still go lower. When I do look across the spectrum, it still worries me about the grain markets because I still think that the inventories are still quite low. Weather is an issue. So if anything there, I still feel that the grains, corn, wheat and soybeans still remain sort of an opportunity, I guess, further down the track.